As an industry, we are facing a perfect storm of evolving customer behavior and demands, new competitors and new operating models, new risks and emerging perils, an economic downturn, and of course technology. And that's before you even get me thinking about Brexit and Donald Trump. But the key question for you today is, how are you going to remain relevant in both the short and the long term in the face of these changes? How are you going to adapt? And do you see the disruption as a threat or an opportunity? The disruption and the change I'm highlighting is not here, it's not coming in 5 years, it's not coming in 10 years. It is here now. Nothing I talk about today is futuristic. It may not have evolved yet, it may not have actually been fully formed into a business concept, but it is here now. Now, some of you in the room will undoubtedly be working on some of these aspects and some of these projects. Some of you will be blissfully unaware of them, head in the sand thinking this isn't us. And some of you will looked at them and disregarded these concepts and said, not relevant, it's not going to happen here. I would challenge you as an industry to say those people will be the Kodak of the insurance world. You'll be irrelevant very, very quickly. So, traditionally, distribution. We saw Direct Line, the first great change to distribution, moving from face-to-face in brokers to telephone. We've seen the rise of online and the aggregators. Disruption now, as we see it, is end-to-end. It's affecting underwriting and pricing. It's affecting capacity. It's affecting claims, servicing. It's affecting changing business models and changing business supply. So, let's start with generation rent. As we know, we're increasingly a nation of home renters, not home buyers, partly due to money, partly due to the lack of decision to own property. But this goes beyond just rentals of property. You've got Zipcar, you have Boris bikes, you have possessions, we have Spotify, people renting music rather than buying it. How is that affecting the insurance market as business moves more into commercial arena than personal? And people actually don't own things, they share things. Whose liability is there for these items? We're also into a sharing economy and into a peer lending economy. So a lot of people like friend insurance and peer-to-peer lending, going back to the first principles of insurance, as people actually helped each other out, rather than using an insurer as a middleman. Some of you will have seen the much heralded launch of Lemonade, a European insurer where fundamentally it's basically a mutual, backed by an investment arm, so venture capitalists taking some money out, with all the profits going to charity. Great concept, certainly attracts a certain group of individual. But for me, when I look at that, it's very traditional. Trove, however, a little bit more interesting actually. So Trove is mainly a gadget insurer. You load all your gadgets up on your phone, and then you transact it online. It's quite straightforward. But the interesting thing about Trove is actually how you buy insurance. Because you decide when you insure those items and when you don't. You swipe it on to be insured, you swipe it off again. So I may not want to buy insurance for a full year, or a full month, or a trip. I want to buy it for 24 hours. I swipe it on, I'm insured, swipe it off again, I'm not insured again. And the price is calculated on that basis. And of course, everything is conducted online. InShared. InShared is a new proposition where all of the servicing is conducted by AI apps. Hardly any humans involved in the process, all with machine learning, trying to get the process far slicker for consumers. Big question there about sustainability of the workforce for the claims function. And then we get down to With You in 5. I'm not sure if you've seen With You in 5. It's part of the Global 360 proposition. I think Direct Line having a little play around with these guys. And this is the Uberization of claims. The ability to use independent people to buy in and service a claim on a per cost basis. It's a very interesting concept as to how that thing fits together with your existing models of business. The one thing, though, worries me, and I get asked this question a lot, who worries me? Am I worried about the churn that we see every day? Not greatly. Am I worried about the aggregators? The meerkat is king, they dominate at the moment. Well, not really. Aviva, you guys from Aviva, sorry guys, you don't worry me. Direct Line, you don't worry me either. Or RSA, or Allianz, or AXA, because we're all the same. We're traditional. We'll churn customers, we'll fight for new business, we'll trade margin, but we're traditional. What worries me is someone new, someone who makes that connection to insurance and has a big, powerful brand. The people up here, the utilities, the telcos, the broadband providers, people who have a day-to-day interaction with customers and have a far more meaningful interaction with them. Those disruptors who make insurance interesting and make it cool.